All right, let's turn our attention to the Inox Group. It's in focus as Inox Clean Energy will be acquiring the Wind World's India's IPP as well as the O&M assets. Now, this will be via two different entities. We have a couple of entities that are listed, Inox Green as well, and Inox Wind is the other listed entity as well. To help us out with this, we have Devansh Jain, the Executive Director of the Inox Group, who joins in. Hi, Devansh. Good morning. Always good to see you, Win, and congratulations on this, inorganic growth that you've taken about. Let's ask you a couple of questions first and understand this in better detail. What's the total amount you're paying for Wind World India? And is there some debt that you're taking on? And the obvious question will be, how are you funding it? Please go ahead.
Hi, Nigel. Good morning. Pleasure to be back. Been a while. So basically what we've done is INOXGFL group through two entities has been the successful bidder for Windworld's IPP assets and O&M businesses through an NCLT-approved resolution process. Inox Clean Energy, which is our privately held power generation and solar manufacturing arm, is acquiring 600 megawatts of operational wind IPP assets across 7 states. That is an acquisition which is broadly going to cost us under 2,000 crores. That's going to be a mix of debt and equity. The equity is already in place. The debt has already been tied in. With respect to Inox Green Energy Services, which is the listed arm for O&M services, we are taking over 4.5 gigawatts of wind O&M annuity revenues, which is a very large O&M portfolio consisting of marquee clients across Tata, Greenco, Hindustan Zinc, etc. Now, this is being funded fully through equity. Inox Green had large cash balances, and that's been used to conclude this transaction.
Got it. Okay, all right. So let's focus on the listed entity then, which is the Inox Green Energy Services that you mentioned, which is going to be taking on the 4.5 gigawatt of O&M. Could you tell us, under its fold now, how much would be coming in after this 4.5 gigawatt addition? And what is the target for this entity, Inox Green Energy Services?
So Inox Green, through investments until now, controlled about 13.5 gigawatts of O&M assets. Now that this transaction has been fully culminated, 4.5 gigawatts will move from an investment basis to an actual operational asset on the balance sheet with full revenues and profitability, fully visible, which will accrue and be visible in the full financial year FY27. In fact, in our recently concluded results, we set out a guidance for Inox Green Energy Services to do about 600 crores of EBITDA for the full financial year, where we've also stated that 600 crores of EBITDA will be equal to 600 crores of cash profit.
So just break it down first for the entity that we're talking about, Inox Green Energy. What is the targeted EBITDA that you're going to be looking at for that particular entity? And also if you could help us out with by when do you see this entire deal getting closed out? And if that's the case, FY27 for Inox Green Energy, what could the revenue, what could the EBITDA look like?
Look, broadly, for this whole transaction to culminate, we've now been issued the letter of intent by the Committee of Creditors. As I understand, it should be a broadly 60-day process to get the final approvals from the Honorable NCLT, and then the company simply folds into Inox Green Energy Services. From a FY27 perspective, we believe Inox Green's overall revenue will be close to about 1,300 odd crores, and we expect the EBITDA to be about 600 crores, which is what we've guided for in our recently concluded analyst call post our results. And as I mentioned, 600 crores of EBITDA would be equal to 600 crores of cash profit because Inox Green as an entity has zero interest. Depreciation goes out because we're demerging our substation business from this entity. And there are no taxes because there are brought forward losses from the previous years when the wind sector was undergoing pain. Hence, I mentioned 600 crores of EBITDA for FY27 should be equivalent to almost 600 crores of cash profit for Inox Green Energy Services.
Got it. Okay. All right. So that's about Inox Green. What about for Inox Wind? What kind of guidance are you looking at out there? I think you're given some very adventurous numbers, but you're very optimistic and you're confident about getting there. I was looking through your con call as well, And, if you just want to revise, what do you end this year with in terms of revenue? On that sort of a base, what kind of growth can you look at? And how's the balance sheet looking of Inox Wind?
Look, from an Inox Wind perspective, we've kind of guided for almost 5,000 crores of revenue for FY26. I think, and we've also upped EBITDA guidances to almost 20 to 22%. Broadly, if you look at that really translate to almost 1,100 crores of EBITDA. And from our perspective, I would assume the cash profits would broadly be about 1,000 crores. Cash profit. Cash profit is nothing but net profit plus depreciation plus deferred tax assets. For FY27, we've guided for 75% growth on top of these numbers. And I think that's a very large number when you look at it. But if you look at where we are in this financial year, we would have grown almost 55% compared to the previous financial year. There had been certain delays over this quarter, and so over the course of this financial year, from certain equipment supply orders which we had, where some of the people, their sites were not ready, some of the evacuation was delayed. But I think we've now got a very, very strongly diversified customer base. We've got almost 15 different customers across 25 different contracts, including a lot of new additions such as Aditya Birla this year, Jackson this year, Amplus, Gentari, Leap, First Energy, Leap Green. So I think we've really made a very, very diversified, strong portfolio and well hedged between 50% being turnkey and almost 50% being plain equipment supply. So I think, 5,000 crores this year itself with almost 1,100 crores of EBITDA is a very large order, which we are bang on for. I mean, for the 9 months which have gone by, we've almost done about, if I recall correctly, about 800 crores of EBITDA. So I think they're very strongly positioned for this financial year. And I think for the next financial year, very, very strong growth numbers. And that's backed up by a very, very large order book, new manufacturing plants which have gone live this year.
Okay. Got it. Devansh,
I mean, people could expect more, but I think we're doing very large, I think we're showing substantial growth.
All right, and you're quite pleased with your performance as well. Just a quick question, since you said the EBITDA number for the first 9 months of Inox Wind is around 800 crores, I think the revenue number is around 3,200 crores. To get to that guidance of 5,000 crores, you have to do around 1,800 crores for Q4. Doable, right?
We've guided for full year numbers, Nigel. I think I'll leave it at that. And I think we're confident of achieving what we've said we will achieve.
Got it. All right, Devansh, always good to have you on the show. Congratulations on this inorganic growth. You're appearing very, very confident. And mathematically, Q4 should be a rather large one, going by your guidance of 5,000 crores on that sort of a basis. Well, you're optimistic about strong growth with good margins. Look forward to chatting up with you soon, and we'll keep tracking these numbers that you've given us.